For more on this, now I'm joined by Jameel Ahmad here in the studio. He's Chief Analyst at Forex broker GTC. It's great to have you with us, Jameel. Now let's start with oil. It's up more than 5% so far this week as tensions rise between the US and Iran. How much of that is genuine supply risk versus geopolitical risk premium?
I would say geopolitical risk premium, because you have to consider that heading into 2026, many of the institutions and many in the market were negative on oil prices. But in the first 6 weeks of 2026, we've had an oil price now that's up by nearly 15%, including that 5% advance this week. But then historically, oil prices at $65 US. It suggests that not enough geopolitical risk premium has been priced in. So I think between now and the end of the next trading week, with that deadline in place, we are likely to see even more volatility with oil. But of course, we hope cooler heads prevail. And in that case, we would likely see the oil prices go back down.
And with the dollar heading for its biggest weekly gain in about 4 months after the Fed's minutes, are markets finally accepting that rate cuts aren't coming anytime soon?
Let's look at the economic data, because you have the PCE data just later on Friday, and should that PCE data actually suggest that inflation pressures are continuing to cool, then I think that timetable from July to June can very quickly reopen. You're looking at US economic data overall that's come out this year. The non-farm payroll report looked good on headline. However, we also had another downward revision of jobs, which suggests that actually the non-farm payrolls on headline, we shouldn't be taking it as much as we used to take it before. Last week's inflation data come in at 2.4%, far lower than that 3% average that we saw in 2025. And if you do see softening of US economic data, don't be surprised if the Trump administration are even more loud when it comes to calling for the US Federal Reserve to cut interest rates. So I think we can move the goalposts depending on how the upcoming economic data outperforms.
And looking at Japan now, annual inflation has fallen below the central bank's 2% target. How much does that complicate the case for normalizing rates?
Well, if you look at the economic data that came out earlier this week, it was very narrow, avoided a technical recession. So I think the other question to ask is how concerned are the Bank of Japan about the likelihood of the Japanese yen resuming its path of weakness? Because you did see the USD JPY, the dollar yen, it fell from 160 to as low as 153 over the past couple of weeks. But if Bank of Japan are not more hawkish and optimistic on interest rate policy, then traders are going to start pricing in weakness into the Japanese yen. So I think the the Bank of Japan here will continue to suggest or hold the doors open for an interest rate increase by the middle of this year, which was anyway the base case scenario. And based on that, I do see the Bank of Japan actually increasing interest rates because I don't think they want to see a weaker yen.
Jameel, thank you very much for joining us here in the studio. Jameel Ahmad, Chief Analyst at Forex broker GTC.